Pat is calling from Montreal. Go ahead, Pat.
Yes, good afternoon, gentlemen.
Hi there.
My question for David is on Telus. I have owned Telus for a number of years, and I have more than doubled my money in the last few years. And I wonder if I should buy more or diversify in some other stock that possibly David might recommend. Thank you so much for your answer.
Thanks. Tell us.
So, Pat, one of the themes that's worked in this market for a long time is dividend growth. And Telus has really been a poster child for dividend growth for years and years. And we don't own the stock currently, but frankly, we probably should. I'm not a huge fan of the telecom sector as a whole right now, because it does fall into the camp that sort of the more bond proxy-like sectors. But within the sector, Telus, has the very high exposure to wireless, and the stock technically looks very, very good. It's just broken out of about a 2-year base that the stock's been in, and consolidated that breakout. So I think heading into next year looks quite good. We have to realize that if our view is that rates slowly rise over the next few years, and as that happens, money will slowly rotate from fixed income and credit, where people have been hiding in for quite some time. They may find they're not making the money that they have been historically, and they start looking for alternate sources of income. So when rates started to rise in the early 1950s, which was the beginning of the last long rate cycle, and it went on for 35 years, the dividend growth stocks really led the stock market for 25 years. And so we think that companies like Telus, can play into that theme. So a little bit better growth, a little bit less wireline, and good dividend growth should be a good combination. It's not going to be a rocket ship, but it's going to be a good, steady performer.
Larry in Toronto, go ahead, please.
Hi, good afternoon, gentlemen. David, out of my tech stocks, Nvidia is the one that seems to be underperforming over the last 3 weeks, a bit of a market correction. Is this something I should just put away and just leave it alone and keep it for the long term, or is there anything I need to be concerned about?
Yeah.
Thank you.
So going from steady to a little more rocket fuel, we get into Nvidia. So as people know, Nvidia really is at the center of a number of really important long-term themes: machine learning, augmented reality, automated driving, a number of different big themes. And it's had a huge run-up, and not to mention Bitcoin. So look, this is a stock that does correct, and semiconductors as a whole have pulled back over the last 2 weeks. I really do believe this is just a bit of year-end positioning that's taking place as people are stealing money from some of the sectors that have had a really good go to rotate a little more toward financials and mid and small cap. I think the long-term trend in the stock is intact. The semiconductor theme is under a little bit of pressure, but I really do think it's year-end squaring up. I think we talk a year from now, semis will have performed quite well over the course of 2018. And so I think its stock's trading 187. It would really take a break of about 160 for me to get concerned. And if we believe we're in a secular bull market and tech is likely to continue to be a part of that, Nvidia is likely to participate.
Okay. Wow, look at that stock. Yeah. Yuri in Keene, Ontario. Go ahead, please.
Hi, guys. I have a really obscure stock that nobody ever phones in about. It's Morneau Chapelle, owned by a famous guy that we all know. I've had it for 2 years, and it has a great little dividends. What are your thoughts? Thank you.
So, look, we're in a market where the things that have been working have changed over the last couple of years. And when that happens, institutions look at their investment managers and say, have you been keeping up or have you not been keeping up? And because the markets have been going through some structural changes and institutions have been going to some reallocation, there's lots of searches going on for managers, and so Morneau Chapelle is right in the heart of that business and participates. It's almost a bit like a capital markets company in that it's sort of a little attached to market performance. It's been a pretty good performer. I have no problem. I would have no problem owning the stock, and it's been a well-run company along the way.
We're going to be back with David Burrows of Barometer Capital Management. The topic, North American large caps. Give David a call at 1-855-326-6266.